I think that it should be 60 2020 now, with gold being 60. And I'm not joking here. This is serious. This is what the Dow-Gold ratio is telling us, that we should be at a 60-20-20 gold, bonds, and stocks. That's if you want to diversify. Tuesday, October 28th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at the Dow-Gold ratio today, and it's a very interesting indicator because it tells us when the reset will happen. And by reset, I mean a currency reset. And we've done something in the last few months that's only happened 3 times before in the last 100 years. Yes, a very good indicator that tells us we should be long gold relative to the general stock market, or long the precious metal sector. That includes silver, of course. Before we do start, though, I wanted to talk about this book here, Good as Gold, How to Unleash the Power of Sound Money by Judy Shelton. Judy Shelton, of course, was nominated for the Board of Governors of the Federal Reserve in 2017 by President Trump. The Senate didn't confirm her, mainly because she's a proponent of sound money. And in this book, she talks about backing treasuries by gold. Not all treasuries, but a big part of it. And we've had Judy Shelton on the channel before, and I can confirm that she's coming on again in November. And the reason I wanted to touch upon this book, and I highly recommend it, of course, it's not the ideal situation for me. For me, the ideal situation would be to go back to constitutional money, i.e. gold and silver. It's in the Constitution, right? But this is a much better step. I spoke yesterday about the fact that, the powers that be need to do something about the fact that we're moving into a hyperinflationary event, unless some kind of backing to the fiat dollar occurs, some kind of backing to gold, of course. Before we look at the Dow-Gold ratio, I just wanted to also talk about a recent article Judy Shelton wrote in the Wall Street Journal. Yesterday actually came out. I'm going to try to get a link for you, a free link, and put it in the description. You can read it yourself. And it shows how gold and sound money are becoming more mainstream. They have become very mainstream in some states, of course, like Florida, which has made gold legal tender again. But the editorial she wrote says how American gold can shore up the dollar. A special treasury bond backed by the precious metals would strike a blow for sound money. So yeah, basically what she wrote here. But one of the interesting things she says in this article, though, is the part about revaluation. And I'll read it for you. The total book value of gold as an asset on the U.S. government's balance sheet is $11 billion, as the result of a statutory price of $42.22, announced, set in 1973. This suggests that the U.S. government has an opportunity to realize a windfall profit by assigning gold holdings as collateral for gold-backed bonds issued by the U.S. Treasury. At current market value, U.S. gold holdings are worth around $1.1 trillion. So there you go. I think that's around $4,200, right? That's 100 times the 42 level. That would be 100 times the 11 billion. That's 1.1 trillion. Just have a look at this picture here that I found. Judy Shelton posted it a few weeks ago or a month ago with Secretary of the Treasury Besant. So what I'm trying to say here, this lady knows what's going on. What about those people who say the U.S. doesn't have the gold at Fort Knox? Well, she ends her editorial by saying, if it takes an audit of Fort Knox to verify the gold, so be it. Trust in the American idea requires trust in the American government. What better way to launch America's new golden age? So there you go. And she also says here, given that inflation remains a major concern for Americans, one might reasonably anticipate that this century's maiden issuance of a long-term U.S. Treasury bond with a gold convertible feature, say on July 4th, 2026, would be oversubscribed by investors willing to pay a substantial premium. Besides furnishing an inexpensive means of federal government borrowing, it would provide valuable information to the Federal Reserve on expectations of future dollar purchasing power, akin to comparing yields on Treasury inflation-protected securities with conventional Treasury instruments. I'm going to stop right here. Have I become a convert to government bonds? Even, let's say, if they're backed by gold? No. But I think for the overall system, this would be a right step in the right direction. I'm still going to remain as my own central banker. I'm going to hold my own gold and silver, right? And I think you should too. So let's get back to the Dow-Gold ratio and how important it is as an indicator to letting us know where to place our savings. And this chart here that I've got that I'm going to bring up, many of you have seen it before. Some of you who are new to the channel might not have seen it. So basically the Dow-Gold ratio is how many ounces of gold you need to buy one Dow Jones Industrial Average. And it goes back to the early 1900s here. I've got it back to around 1917, even though you can go further back. So the three tops that we've had, the three major tops we've had in the last 100 years, those are the tops in the stock market relative to the gold price. Of course, prior to 1933 in the U.S., gold, the dollar was as good as gold, so it was the top in the Dow. It wasn't really the Dow-Gold ratio; it was just the top in the Dow. And this is per ounce, of course. So yeah, at the time, 1 troy ounce of gold was $20.67. And that ratio was just above 20. So yeah, the Dow almost reached 400. And then we saw the crash of 29 and then the bear market that bottomed in 1932-33. There's like a double bottom. And that ratio actually got down to around 2. So you only needed 2 ounces of gold to buy one Dow. The Dow dropped like 90% during the Great Depression. And the black line that you see, I've added this on. This is a new thing here. And actually, I have to thank Charles Gave. He's an older gentleman who's French, but he's like a market analyst, fund manager. And I watched one of his videos, and he uses this 7-year moving average with the Dow-Gold ratio, and I thought it was really interesting. And you can see that the Dow-Gold ratio is only crossed below that 7-year moving average, while up until recently it had only crossed below it 3 times in history, and all those 3 times that crossing below it, a kind of death cross for financial assets, had only happened 3 times, back in the 30s, and back in the 60s, and back in the early 2000s. And every time that happened, there was some kind of reset, or the precious metals, especially gold, outperformed the general stock market. It was the time to be in gold, or heavily weighted in gold versus the stock market. So what does the Dow-Gold ratio mean when it reaches the bottom, like it did in 32, 33, 1980, and to some extent in 2011? Well, it means that it's safe again to go into the financial or the general stock market or financial assets, and that you don't need to hold gold. And actually that was true in 2011. And why did this ratio not keep going down in 2011? Well, I think it's because the central bankers did something they hadn't done before, and that was massive money printing. So they bought some time. They kicked the can down the road up until recently. But now you see that for the 4th time in about 100 years, we've crossed back below that 7-year moving average. And I think that's really pointing to a major outperformance by gold in the coming years. And I think the reset will be complete when we reach at least 1, but we could go below 1, which would mean you need less than an ounce of gold to buy 1 Dow Jones Industrial Average. And when that happens, I think it means it will be safe to get back into the stock market. Yes, I would never get rid of all my gold, but you can use some of your gold to invest in financial assets. It will be safe. Right now, just like Morgan Stanley a month or so ago said that their 60-40 portfolio is now 60-20-20, that they're taking 20% off their bond holdings towards gold. And gold used to be 0, right? 60-40 was just stocks and bonds. I think that it should be 60-20-20 now, with gold being 60. And I'm not joking here. This is serious. This is what the Dow-Gold ratio is telling us, that we should be at a 60-20-20 gold, bonds, and stocks. That's if you want to diversify. Some people might say, well, I'll just go 100% into gold. Why hold stocks? Well, and bonds. Well, some people might need dividends or income from bonds, a coupon. So I can see why they'd want a 60-20-20 portfolio. So now I want to talk a little bit about the gold price and the silver price, what they've been doing in the last week. Yeah, it's been a bit topsy-turvy, to say the least. Prior to a week ago, everything was plain sailing. Gold was almost at 4,400. Silver was back above 50 for like the first time in 45 years. And now it's turned a little bit. We're down about 10% in gold, and silver it's more. And a lot of you might be a bit concerned, and I've gone through this before. Ever since 2002, when I started buying gold, I've seen many of these moves, and yes, they are kind of gut-wrenching, but don't forget, and I've got my calculator here, gold started the year at 2,600, so right now, Rudy and I got up quite early today. It's not even 6 a.m., but London time, but gold is at 39.62, so if you do the calculation here, gold's still up 52% this year. So you've got to take things into perspective. And there's the old cliche, no pain, no gain. That's what it's all about. And there are very few people who are going to stay the course, hold the fort with their gold and silver. And I think they're going to be highly rewarded for it, because none of the fundamentals have changed for gold and silver. None of the geopolitical factors have changed. So, yeah, I'm not concerned. I've become immune to this. Of course, it's kind of gut-wrenching, as I said, sitting through it. But 2-3 months ago, gold and silver were a lot lower than they're now. Beginning of the year, they were massively lower, and here we are. And there's a lot of hate that I see from the Bitcoin crowd, from the mainstream crowd. So gold is now hated not just by the bankers and mainstream economists and almost everyone, but also the people that were supposed to be proponents of sound money, of small government and decentralization, right? The people who are into Bitcoin. So to me, that's a sign that we're nowhere near where gold is going in terms of providing purchasing power. I don't even like to say the price anymore, because that's not really what it's about, right? So what have I been doing in the last week or so, in the last few days with this correction? Well, I have bought a little bit of silver, but yesterday I decided to add on to my tax-free account here in the UK. It's called an ISA, and thankfully I had some spare fiat currency, and I transferred it over, and I bought some Vizsla silver stock. I already had that. I added on to it. I think that's a good company, Vizsla. I even have done a promotional video for them. I think it was earlier this year. And I also added on to Newmont, which is the bellwether miner, really, in the gold space. So there you go. Why are Rudy and I up so early today? It's 5:53 a.m. Well, I'm going to go play golf this morning. I've wrapped up quite a bit. I've got my thermals on. I'm going to put a few more layers. But it's going to be a nice day. But it's going to be a bit chilly and windy here in England or in the UK. Yeah, the courses don't really close during the winter. We don't get much snow. And yeah, it's just a nice way to exercise and enjoy yourself. And yeah, get out of the house. So anyway, yeah, hold on to your gold and silver for dear life. Don't let people get to you. Ignore all the hate. Yes, have a thick skin. And remember, no pain, no gain. And just remember the rewards that you're already getting from gold and silver this year. And I think they will multiply in the next few years, especially with that indicator of the Dow-Gold ratio turning south, that death cross for the Dow versus gold. So I'm going to stop right here and wish you all a very good day. Yeah, take care. Bye.